Hey traders, today is Thursday, January 15th, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick multi-time frame look at the euro dollar. It's been a pretty lackluster week. Euro came off more than 1.6% off that late December high early in the year, turning from a well-defined resistance that we've been tracking 1747 into 117.75. It was the 618 retracement of that September decline. It's also the 2025 high week close and the 2025 high close. So we were looking for a reaction there. We're now poised to mark a third consecutive weekly decline off of that zone with a more meaningful support now in view. Just below 116, around 115.90 is the 618 retracement of the advance off that November low, converges on upslope support, and we'll be looking for a larger reaction there if reached. Now, this week's opening range is defined by the Monday candle. It's actually looking for a test of that today, so we'll see if that breaks. But that Monday advance failed right at the 38.2 retracement of the drop. We're trading within the confines of this nice descending channel right off of the highs from late December. And we're looking to see if we get that break below the weekly range, we'll be looking for a more meaningful support right there just below 116. Also note the 200-day moving average is right there as well. If this level were to break, it would suggest that there's a much larger reversal, much larger correction underway in the euro, would open up the potential for maybe even a drop towards 115. But the focus is on whether we get that tag or not, and the reaction here, I think, should be more telling on guidance on euro moving forward. Here's what it looks like on the 4-hour chart. This pitchfork formation we've been tracking since those highs still remains in play. The median line is right there alongside the objective weekly range low being tested right now near 1621. If we break, there's that key support zone. Not only is it the 618 retracement of the November rally, it's also the objective December swing low and the 100% extension from the decline off of that December high. So even if this whole move back is a corrective, simple ABC pattern, it would still allot the potential for a drop towards that 1590, 116 region. Resistance still 1690 into 17, that 38.2 of the drop. And again, those swing lows that we made back in December, both of those converge on downtrend resistance. You would need a breach, a close above this region to suggest that a more important low has been registered and a larger reversal is underway back to the top side. If you're looking for a rally towards that 618 retracement, the objective yearly open, that all comes in at 1735 into 1745. We did get some data this week with regards to CPI numbers coming in better than expected, showing a nice cooling in the rate of price growth. PPI figures yesterday were a little bit hot. Retail sales coming in stronger than expected as well. And it really puts the potential for next week. We get an update on the PCE, the Fed's preferred inflationary gauge. Personal consumption expenditures are expected on Thursday of next week. Now, these are going to be a little bit dated. These are going to be the October, November reads on the account of the government shutdown, but that's going to be the major headline event risk into next week. All things held constant, Fed fund futures are still pricing the April decision with a 64% chance that we're going to see the Fed hold. So it's not until June where you start to get a larger consensus, roughly 68% chance that we're going to see the first rate cut of at least 25 basis points. So that shift in policy since the start of the year has really continued to put a floor in the US dollar and really bolster DXY. We'll see if that shifts next week. All things held constant right now, looking to see if we get a break of the euro dollar range low for the week, and a potential test of that 116 handle should be more definitive for euro dollar price action moving deeper into the month. We'll try to keep you updated as always on X at MB Forex. Till then, best of luck trading. We'll see you next week. Cheers.